if you look at the LBMA, inventories are going lower and lower and lower and lower. And then if you look at how the bullion banks hedge out their positions, it leaves a net 50 million ounce inventory. So
in this video, we're covering what silver expert Shawn Khunkhun just revealed, the truth about who's really buying up millions of ounces of silver. He explains how general investors are flooding into silver as gold becomes too expensive, and why this shift could spark the next major bull run.
And so let's just take the 50 million ounces of deficit that we're talking about here. Who or what entity potentially could be drawing from that demand?
Well, I think what you're seeing is as more generalists come into the space. You know, silver historically has been a metal that once gold has put in a big move. And we've seen, you know, gold and gold equities really outshine almost every other asset class. As that trickle down occurs and as the generalists come into the space, they're often priced out of gold. You know, high net worth retail investors. You know, gold is almost unattainable for the average investor, whereas silver isn't. And so as those speculators and precious metals enthusiasts come into the market, they gravitate more to silver. And that's why I suspect in this next leg of the bull market, like we saw back in mini bull markets of 2020, 2016, major bull market of 2011, silver dramatically outperformed gold.
What Shawn explaining here is crucial. Silver's demand isn't just industrial anymore. When gold moves higher, the wealth flow naturally shifts into silver. Every major silver rally, 2011, 2016, 2020, began with this exact pattern. That setup might be happening again right now.
You've actually said in a recent interview somewhere that silver is rarer than gold. What do you mean by that?
So look, I believe that if we stopped mining gold, you know, for whatever reason, all the gold we've ever mined, which only fills up 2 Olympic-sized swimming pools, vanished. We could function as a world without gold, but we couldn't. It would be highly disruptive if silver was taken out of the equation. And so if you go back to history, there is a 16-to-1, silver is 16 times more abundant than gold. But because over this last 5,000 years, we've been mining and mining and mining, we're now at a point where we're mining 7-to-1, not the natural relationship of 16-to-1. So we're mining, for every 1 ounce of gold we mine, we only mine 7 ounces of silver. And again, the silver's being consumed. And because of the price, because you've got a 90-to-1 silver to gold ratio, we're not recycling silver in the same manner at the same percentage that we're recycling gold. So what I see is a situation where as industry is consuming more for solar panels, for the war machine, for electronics, electric batteries. You know, I just see us getting to a point where, you know, that silver demand, I can see us in the future mining 4-to-1, 3-to-1, 1-to-1. And it's why there are some speculators or investors that are calling for $300 silver.
This is shocking. We used to mine 16 ounces of silver for every ounce of gold. Now it's closer to 7-to-1, and the gap keeps shrinking. Unlike gold, silver gets used up. It's in electronics, batteries, and solar cells, and once it's used, it's gone. That's why some experts see a future of triple-digit silver prices.
Yes, the market doesn't seem to reflect this sentiment, though. We're talking about 100-to-1 for the gold to silver ratio. We're near to 100-to-1, even though, like you said, the mine ratio is near 7 or 8-to-1. What do you make of this big difference here?
I think we've been in a universe where it's been central banks that have been buying gold. And really, apart from 2 recent central bank purchases, central banks have not been known to buy silver. So I think, you know, the central banks have been buying gold. The market really hasn't come in and caught a bid under silver, which is why I still think we're in the early innings of this gold bull and precious metals bull market. GDX, which is the index that owns the major gold producers, just on Friday of last week, finally got back to its 2011 high. Gold was at less than $1,900 when it hit that 2011 high. Gold today is over $3,500 an ounce, and the stocks have just gotten back to where they were 14 years ago. If you look at GDXJ, which is the junior miners, they still have another 50% to go before they replicate their 2011 high. Silver equities have actually done better than the junior golds, but they haven't done as well as the senior golds. Now, historically in bull markets, both silver and silver equities drastically outperform gold and gold equities.
This ratio is one of the most powerful indicators in the metals market. When it corrects, silver historically surges, often outperforming gold by 2 or 3 times. Shawn's message is clear. The silver market is still early, and the biggest move may yet be ahead.
If you believe silver's next bull run is coming, make sure you're watching this market closely. Stay updated, subscribe for more real silver and gold insights, and don't miss the next major move before it happens. Disclaimer: this video is for educational and informational purposes only. It should not be considered financial advice. Always do your own research or consult with a licensed financial advisor before making any investment decisions. Investing in precious metals involves risk, and past performance is not indicative of future results.